this combined entity accounts for 98% of the trading volume, the derivative trading volume in the US, and a significant amount also globally. As a group, we represent ourselves in 85 countries. There are people trading our products in 85 countries globally. Our combined revenues, like I mentioned before, is 2.7 billion US dollars. And depending on what the share price is, we're about a 25 billion US dollar company in market cap. This merger was meant to enable us to deliver products to all our customers as a combined entity, instead of having different exchanges specifically do different products. Now you have an exchange that is truly multi-asset. It goes on energy, commodities, FX, equity, interest rates. So we cover the whole swath of the asset class already. And because there's only one platform, one common platform and one clearing, and we're able to offer our customers convenience and connectivity. There's a lot of economy of scale in providing these services. So this is where the competition is taking us. We realized as the NYMEX that this merger was important for our growth as well. And that's why we're excited about the opportunities that are ahead of us. And also currently we are in the process of providing margin offsets for trading our products. That simply means that if you, let's say we already give that already, but I'm giving you an example. They have a buy of WTI and a sell of heating oil. The margin for that actually is less than the margins that of the combined two asset classes. So we will provide margin offsets for other asset classes across wherever we can find relationships, between foreign exchange and gold or whatever. We will give those margin offsets. So we expect 16 million US in savings per year from this merged entity. That comes in terms of duplication of services. From the NYMEX, at least from the NYMEX perspective, maybe I'll give you an update of how much we've achieved this year. We've actually managed to grow our Asian-based volume significantly. We're growing at about 150% year on year from the previous year for our energy and gold. Right? So we're doing very well. Overall group for NYMEX is up 30% year on year from the last month's trading volume. So we are doing extremely well. We are very happy with our results, and we hope that we can continue. We can even grow even faster as part of the CME group. We're very excited about our opportunity. We have now access to more resources than we had before. Just to give you an example, we had 2 people representing the NYMEX for Asia 2 weeks ago. Today, as a part of the CME group, we will have 12. We have offices now in Japan, Hong Kong, Sydney, and Mumbai, and of course Singapore. So going forward, the combined entity will put a lot of emphasis on education. We believe that is something that we can do very well. We find that in Asia in particular, by educating our customers, we actually drive our volumes up quite a bit. So we will put a lot of emphasis on education. Well, in 60 days, starting from Monday, we will formalize our staffing for the NYMEX. All right, reporting structures, lines of reporting, that kind of thing. Okay, the membership will be integrated by the first quarter of 09, sorry. Okay, the fee system would be integrated by the second quarter of 09. At the same time, they will be integrating the NYMEX and COMEX trading floors into one. We won't keep it separate. Right now it's separate. COMEX is separate than NYMEX. We will merge the trading floors. We will have a lot of savings from that. by the second quarter next year. And then by the third quarter, we will finish off with the clearing system and price reporting system. Clearing is always the largest component because that involves open interest and all that. But that derives, you get a lot of savings from integrating that because system-wise you don't have to maintain two systems. Currently, we don't have a trading platform. We use Globex. So the transition for many of the customers is transparent because the access to our markets is still the same. The difference for our clearing members is the clearing, because instead of having two exchanges next time, by the third quarter next year they'll have one. And that lowers their system maintenance costs for them as well as for us. That's why we see a lot of cost saving. And that's why our clearing members are excited about the merger as well. I think what this means for Asia is if we are going to emphasize on education, I think we will have the resources to bring up the understanding of derivatives in Asia quite a bit. You know, with the resources that we have, not only in Singapore but spread out throughout the region. As a group, be able to speak to regulators about opening markets to derivative products, assisting them in coming up with regulation that actually enhances the way derivatives are traded in their home country. You know, as you know, we have a very fragmented system, derivative trading system in all parts of Asia. You know, it may always remain fragmented, but I think having them understand, you know, derivatives is very important, so that when they design regulation, they understand that, you know, what is it that they are going to affect, what is it they're going to promote, what is it that maybe they're going to affect in terms of, you know, maybe taking a step backward. We can provide that knowledge, and we are already providing it. But as a combined entity, we don't do it as different exchanges. We do it as one, and we don't do it as only one asset class. We do it as a multi-asset class. Last time we spoke to them in terms of energy and metals. Now we can speak to them in terms of interest rate, equity products, and all that. CME, the same thing. They used to maybe talk to the regulators in terms of financial products, maybe agriculture recently because CBOT just got merged in. Now they can talk about energy as well, and that opens up a lot of doors for us. We have already actually done integration planning over the last 3 months. Okay, the difference is now we're putting those plans into action. All right, so it's not so much, you know, it's an ongoing process already. So in terms of the day-to-day running of the business, I think it still has to run. Okay, that's primarily why we got together. So we will still focus on getting that business, building that business. Integration will have a priority as well, and we will get that done. Right, but the business has to go on, irrespective.
The Asian operations will be headquartered out of Singapore?
No, it will be headquartered out of Hong Kong.
Hong Kong.
It's run by CF Wong.